Good morning, everyone, and welcome to Understanding New Jersey Disability Insurance and How You Can Save. I'm Vinny Civitello, Communications Manager for the New Jersey Business and Industry Association. With us today are Tom Fascino and Jim Iannicelli from Arch Insurance. A few housekeeping matters before we get started. Today's webinar is being recorded and will be emailed to you tomorrow along with the PowerPoint for today's presentation, so be on the lookout for those. I'd also like to draw your attention to the Questions tab. Tom and Jim would be happy to take all of your questions, so don't hesitate to write them in as they come to you. And I can't stress that enough. Be sure to type them in as they come to you, or you might forget what you wanted to know by the time we hit the Q&A later on. So now let's just get things started. Tom?
Great. Thank you, Vin. So today we're going to cover an introduction to the statutory disability plan in New Jersey, how it works and who benefits from that, your options as an employer, and Arch's solution for the NJBIA members. So there are 5 states in the country that have laws in place that require mandatory disability insurance for their employees. California, Rhode Island, Hawaii, New York, and New Jersey. And in New Jersey, all employers are required to have this coverage for their employees except for certain governmental employees. Now that means every small employer, from a small pizza shop on the boardwalk to some of your largest employers in the state. So New Jersey TDI benefit is basically a partial income replacement for employees who are unable to work due to a non-work related illness or injury causing a disability. Now that payment, like we said, is partial income replacement. In the state, that benefit is 66 2/3% of the employee's average weekly wage, up to a maximum of $633 per week after a 7-day elimination period. That maximum, that $633, does adjust each year depending on the average weekly wage of the employees in the state. And that payment is for a maximum duration of 26 weeks. So examples of where someone may use this coverage, the majority of those claims are maternity, or it could be an off-the-job accident or event such as a broken leg in a skiing accident or extended illness that would keep you from working. So New Jersey employers have a choice on where they get this coverage. They can shop in the open market, but the most employers in the state get this coverage through the New Jersey State Plan, which is managed by the New Jersey Department of Labor. Now, approximately 95% of the employers in New Jersey are covered by the New Jersey State Plan, which they enter into when they initially start their business. They do have the option, all employers do have the option to move to a private carrier over time, but like I said, all of them just start initially in that state plan. Now, the New Jersey state does set all the rules for any disability plan, whether it's managed through the state or through a private carrier. So they set the benefit amount, the employee contribution rates, and a wage cap. So employees and employers together pay the cost of the disability plan, so essentially the premium on that policy. So employees contribute 0.24% of an employee's total wages, up to a maximum of $33,500 in 2017, and employers contribute into this plan as well, and the amount that they contribute is set by the state, if they're with a state plan, based on their claims experience over time. So just to reiterate, the premium for this coverage is paid for both by the employees and the employer. I'm going to turn this over to Jim here, and he's going to talk a little bit about the rate structure and how the state comes up with those rates.
Okay, thanks, Tom, and thanks everyone for joining. I'm going to go through basically how much does an employer pay the state for this coverage and how you're notified of what you pay the state for this coverage. The notification that comes from the state regarding your rate is sent via a form called the Notice of Employer Contribution Rates. Pretty clever name for that form. And that form is sent out at the end of each fiscal year, which runs from July through June of each year. The form typically is sent to employers by mail around the third week of July of each year, and it takes the state approximately 2 weeks to get those forms into the hands of every employer. So generally between end of July and the first couple of weeks of August, every employer receives this form. This form is broken into two parts. If you can see, the top part of the form has to do with unemployment insurance. It gives your final unemployment insurance rate that you pay to the state. What we're going to be talking about today is the disability insurance contribution rate that the state is charging, and that's in the bottom of the form. What will shape how Arch delivers quotes to you are the average wages in which the employer contribution for disability has been paid. You can see that red box in item K, and also your final disability insurance rate all the way at the bottom. So what the state is telling you here is how much you've paid into the fund since business inception, how much the state has paid out in claims, what your average payroll is, and the rate they're going to be charging you for that fiscal period. So what does that mean in terms of what employees pay for TDI? You'll see when an employer first goes into the state plan, and again, as Tom mentioned, this is a default. As soon as you start to do business in the state of New Jersey, you register to do business, you're automatically put into the state plan. The state will initially assign a state employer rate of 0.50% of the taxable wage base. After 3 years, the state sets a rate based on the employer's claim history, the claims paid versus your contributions that you've paid into the fund. As I mentioned, the rate is reevaluated each year and adjusted accordingly, and it's reported on that Notice of Employer Contributions form that we just saw on the prior screen. The lowest rate that the state will assign an employer is 0.10% of the taxable wage base, and the highest rate is 0.75%. You'll see that in that column that says state employer rate. The lowest rate at the bottom is 0.10, the highest rate is 0.75. Now, as far as the employee contribution, that is a fixed amount the state sets every year. For the current year, that employee rate is 0.24%, and that changes annually as of January 1st of each year. So you can see the lowest an employer can ever pay with the state is 0.10 plus the 0.24 employee contribution, and the most that an employer can pay to the state is 0.75% plus the 0.24 employee contribution rate. Okay, so what we're going to show here is an example of an employer in the New Jersey State Plan. ABC Company, pretty original there, having 50 employees and $1,675,000 in annual covered payroll. If you look to the left, the employer assigned rate, we chose 0.25%. The employee contribution rate is 0.24%. So if we take the 1.6 million and we multiply that by the 0.25% rate, that would be an employer cost of $4,188. The employee cost at the 0.24% rate would be $4,020, and the state also charges employers some disability assessments each year, which in this case would total $462. So for this group, having that $1.6 million payroll, 50 employees at a rate of 0.25%, the total annual payment to the state would be the $4,188 employer contribution, plus the $462 employer assessments that the state is going to charge the employer, plus the employee contribution of $4,020 for a total of $8,670. So we take that again, and this time we're going to go with XYZ Company, having 150 employees at about $5 million of covered payroll. This particular employer would have the lowest rate that the state would assign of 0.10%. So that means basically they've had very good claims history since they've been doing business, because the state did their calculations and assigned them the lowest rate. The employee rate, again, stays at 0.24%. So in this example, the employer would pay $5,025 based on their 0.10% rate multiplied by their payroll. The employees would pay $12,060, taking, again, the covered payroll times the state assigned rate, and the employer assessments based on the employer's payroll would be $1,387. So again, just as we looked at in the last screen, the total annual payment to the state is $5,025 employer rate contribution, plus $1,387, the assessments the state is going to bill the employer, plus the $12,060 employee contribution, for a total annual payment of $18,472.
Okay, thank you, Jim. So all employers, I guess with that example, you can see how the employees and employers together, this is for every company in New Jersey, are paying together to pay that premium of the disability insurance into the state plan. Now, all employers actually have the option of moving out of the New Jersey state plan to a private insurance carrier. So an employer would do that. And the main reason is cost savings. A lot of employers sitting at, at one of those lower rates that Jim spoke about can really have significant savings on what they're paying to the state today for the exact same disability coverage. Also, moving to a private carrier, you can certainly improve your claim service so that when you have an employee who is out on disability, they can receive checks faster and get information quicker. So that time that they're home, unable to work, it makes things just a little bit easier. And also, a private insurance carrier does have the option to enhance these benefits. Some employers may opt to offer their employees a higher disability benefit than what the state offers, and you can do that through most private insurance carriers. So for an employer to move out of the plan, the New Jersey plan, to a private carrier, it's fairly simple. Number one is, and we'll go through this in a minute, it was basically getting a quote from a reputable approved insurance carrier in New Jersey, hold something called an employee consent election, which basically need a simple majority of the employees to consent to moving out of the state, because they contribute into the plan, so they have a say in where that plan is supplied, and basically signing an application form. And we're going to go into this in a little more detail in a second. So why don't more employers move out of the state? You can see on this chart here, 95% approximately of the employers in the state are with the New Jersey state plan. It really just comes down to knowledge. Many employers don't realize that they have the option to move out of the plan and to shop in the open market. It's not something that's really talked about a lot in most circles, but it is your option. It's built into the law. So it's really just knowing what your rights are as an employer in the state. And you know, something that can be problematic, but we have ways to kind of make this easier, is just having that employee consent election completed. For smaller companies, getting a simple majority of employees to sign a consent form is really not a problem. But if you've got a larger organization, it can be a little more difficult to get those signatures. Like I said, we do have ways that can help, you know, ease that a bit and try and get those signatures. So now, Jim and I are from Arch Insurance, and we became a partner of NJBIA back in September of 16. And we came here to build this partnership because we feel that we can really offer a good product to the NJBIA members and give them something special. Now, you may have seen some of our ads running over the past year. You've seen some banners and some advertising in magazines that we have that you know, advertise about the coverage that Arch is offering. So what we've put together for the members is special pricing for members that you do need to be an NJBIA member to get the pricing that we have set up for disability coverage. The second point, which is very important, is that members become part of an insurance pool that stabilizes your rates. So this is really uses the power of NJBIA. There are so many members through, you know, across the state, that what we do as an underwriting company is that we look at how all of the members are basically performing before we actually choose to change rates. So this really helps stabilize you as an employer, so that, you know, you have a few claims, your rates just don't suddenly go up, which you've seen in other types of insurance that you have. Arch also pays that annual assessment fee that Jim was speaking about earlier, and you saw in the example that can add up to a significant cost. When you are with an Arch plan, there is no additional cost to the employees. The employees are going to pay the exact same amount into the plan that they're paying today into the New Jersey state plan. We also have a very fast claim payment structure. The New Jersey plan takes on average 2 weeks to pay a claim. In Arch, our average claims are paid in 4 days or less. And that does mean a lot for when you're home with a disability and you're relying on that check to come in the mail. And also, as an employer and a member, you get access to Arch's online FICA and claim reports, which it can be very vital to when you're managing multiple employees who are out on disability. These reports, you know, give you information that allow you to see when an employee went out on disability, when they're expected back, and also see their FICA deductions as well. I'm going to send this back over to Jim now. He's going to explain the special rates that we have available to the NJBIA members.
Thanks, Tom. Yeah, so earlier we spoke about the rate range that the state of New Jersey will charge employers. So the employers, basically with the best premium versus claims experience, get that rate of 0.10%, and the highest rate would be 0.75% with the state. So what we did when we partnered with the NJBIA is developed a program where we'll look at the employer's final disability rate from the state, and in a lot of cases offer an automatic discount to the employer. Again, you know, as Tom mentioned, whether you're in the state fund or a private plan, the employees pay the same. There's no cost differential. So if we go all the way to the bottom of this form and we look at, you know, on that notice of employer contribution rate form that we looked at earlier with that had those red boxes on it, if the state of New Jersey employer rate is 0.10%, Arch is going to charge that employer nothing. We're going to charges the policy only based on the state employee rate of 0.24%. And so what we're doing is we're offering the employer 100% savings. They don't have to pay anything to come over to the Arch plan. And, you know, as we go up the ladder, let's choose, you know, 0.20%. If your rate on your form is 0.20%, as the employer, we're going to charge you 0.14%. Again, we're going to keep that same employee rate, but we're going to offer the employer 30% savings. It's pretty good. You know, you hear a lot in the marketplace about 15% savings being, you know, a really good mark to hit. So in a lot of cases, we can even exceed that, and even when we get a little bit below that, we're still saving that employer money. So we do that guaranteed discount all the way up to an employer rate of 0.50%. If you look on that column to the left, 0.50%, we'll charge the employer 0.47%, and we're going to offer that employer 6% savings. Once we get into the higher rates, we do have to look at some experience for the employer. So we will underwrite that case. We'll get some additional information, really being some additional forms from the state of the experience, and we underwrite that case. In a lot of instances, we can still save those groups money. But that is the rating structure that we developed with the NJBIA. Okay, so we looked earlier, you know, at a group that had 150 employees, $5 million of payroll, and when we looked at the bottom, we saw the total annual payment to the state between the employer contribution, the assessments that the state is going to charge the employer, and the employee cost. This particular group would pay the state $18,472. Here's an example of savings with Arch. So if we go over to the left, same group, 150 employees, about $5 million of covered payroll. You see that state rate of 0.10%. Under the NJBIA program, we take it down to 0. The employee rate stays the same, whether private or state, but you'll see that $5,000 the employer would have been paying to the state is now 0. Arch also pays the employer assessments for the disability insurance when we take over the coverage. So that $1,300 we looked at in the prior screen is again now 0. So we look at total annual payment to Arch, 0 employer contribution, 0 assessments, and that $12,060 employee contribution for a total cost of $12,060. So that $18,472 the employer was paying to the state now becomes $12,000 paid all for by the employees to Arch. So the employer is going to have over $6,400 of annual savings in this example. I think we have another example, Tom. So Tom, why don't you let everyone know how to get a quote under the program?
Sure. Thanks, Jim. Yeah, so as you can see, there's the possibility of some very good savings by moving from the state plan. So to get a quote from us, from Arch, the partner with NJBIA, we work exclusively with one of our partners called Two River Benefits. You can contact them at 732-842-6200 to speak with someone there, and they can give you a quote. Or you can contact us at archnjbia.com at archinsurance.com. And to receive a quote, really the best information you can have is this notice of employee contributions form that Jim was talking about earlier. You're going to be receiving one in the mail shortly from the state. So you'll have that form fresh on your desk. That's the best information we can have to do a quote. If you do not have this, we can still provide a quote. We'll just need your employee tax ID and the taxable wages. This is something we can easily walk through with you if you don't have all the information or just unsure about how to get that information together. So again, the quoting is very easy, and we always tell people it doesn't cost you anything to get the quote, just to see where you stand with the state and what you could actually be saving. So just to kind of round this out, so the claim process, is very simple. When an employee is going out on disability, the form that they need to fill out has 3 sections. A Part A section that the employee completes, which is just basic information, name, address, social security number, an explanation of their disability. Part B is their medical certification, and this is filled out by their physician, which verifies and identifies the disability and provides the date of disability and the expected return to work date. And the employer section, which the employer must fill out and sign, so this verifies their length of employment, their last day worked, and their 10 weeks of salary history that's used to determine what their benefit payment will be. So our claim examiners review all this information and set up a claim. If anything is missing, they will be contacting one of the 3 parts here. If something on the medical piece is missing, they're going to contact the physician, make sure everything looks correct before they actually approve the claim for payment. And just a footnote here, so all claim payments must be reported on an employee's federal income tax return because the FICA deductions do apply. So that concludes our discussion here, an introduction on the New Jersey Disability Plan. I'm going to send it over to Vin to see if we have any questions.
Thanks, Tom. It looks like we have a couple already, but I want to give everyone a moment to type in anything they have. While I'm doing that, I'd like to take a second to remind you about the Handouts tab. I used to get a lot of questions from people about how to download the PowerPoint slides, but ever since I started stalling time explaining this, that's gone down. So just open up the tab marked Handouts, and the file is right there. I think it's called archwebinar.powerpoint, not very cryptically named or anything. You can always wait until tomorrow if you want to. They'll be emailed to you along with the video recording of the webinar, so you can watch that at your convenience, print them out, all that. There's also the Questions tab. If you have a question, type it right in there, and I'll make sure our guests answer it. And don't be shy. You're going to get a survey after this is over asking you, if you like the webinar. And whenever someone says something like, oh, I wish they would have touched on X, or I thought I was getting into a conversation about X, I always ask myself why they didn't just ask the question. You've got 2 experts here, so take advantage of them. So with all of that out of the way, let's jump right into our first question that comes from Jason, who would like to know, is the definition of disability any occupation rather than own occupation, like with disability insurance income insurance, any occupation versus an own occupation definition?
Okay. Yeah, great question, Jason. There is nothing in the New Jersey TDB law that defines what type of work an employee would have to be offered upon returning to work after disability. So there is no ENEOC or ONOC section to the New Jersey TDI policy. What the law does indicate is if an employer can offer work that is relative to that employee's regular occupation, that would count for the employer as offering employment to that worker. So it leans towards ENEOC, but it is not written within the law.
Okay, we have one from Bharat who asks, 4 different companies, so she's got 4 different companies, each has 10 to 12 employees. Can they combine coverage to a private plan?
Yes, we can combine coverage as long as there's common ownership. We can put all of the coverage under one policy, but under state law, we do have to file under each legal name and federal ID number for that to count as meeting the mandatory requirement. And so what we would do is get the 4 company names, federal ID numbers, rate each company based on their own merit, and then we could ultimately combine under one policy. As far as rating, a company, 4 different companies to be under one policy, we would generally do what's called a composite rate. We would take the total cost for those groups that we would charge individually and combine all those costs into one rate for the employer. That's basically how that would be handled.
Okay, Pamela has a question. If you just became an employer at the beginning of this year, will you have to pay for the entire year?
Basically, what will happen is the state is going to ask you for your quarterly payroll. So if you had payroll in each of the 4 quarters of 2017, then you would have to pay the state during all 4 quarters. If you only had payroll beginning 2nd quarter, then you would pay for quarters 2, 3, and 4 only. So it's all based on when you actually had payroll.
Great. We have another one from Jason who asks, how much can the benefits be enhanced with Arch versus the state in terms of incremental, A, monthly benefit and amount, and B, benefit period if applicable?
Thanks again, Jason. Basically what we will offer at Arch, so at current, the weekly benefit rate, as Tom mentioned during the presentation, is 66 2/3% of salary to a maximum of $633 per week. Arch will basically go to 70% of salary to a $1,000 per week maximum, and we don't extend on the duration of benefits. We do keep that at 26 weeks. So we'll take that up to 70% of salary to $1,000 maximum for up to 26 weeks of benefits.
Bill asks, what does Arch or the state do to protect against fraud?
So as explained earlier, we look at, we receive a claim form which has information on there from the employee, employer, and physician. So claim examiners are going to carefully look at all that information to make sure the employee, number one, is employed correctly, and we're going to look closely at that, the physician input to verify that the the disability matches the duration that we're seeing on the form. If anything seems off, the claim examiner is going to contact the physician to look into it further to make sure that there's not we're not receiving a form that has been fraudulently filled out. But that's those 3 parts together, and at times we'll do an independent medical examination as well to verify the disability of the employee.
Wow, a lot of great questions here. Keep them coming. Shelley asks, is the benefit amount the same for employees, 66.66%? What is the max benefit amount?
Well, thanks, Shelley. Yeah, so basically, whether you are with the state plan or with a private plan carrier, the benefit is the same for employees. It's 66 2/3% of salary up to a weekly max of currently $633 per week. The benefit does go up every year about 3 or 4%, but at current it is that $633 per week cap.
Suzanne asks, can you explain a little more about the employee consent election and how it's done?
Okay, yeah, so basically when this law was put into place back in 1948, the state said in order to leave the state plan and go to a private plan carrier, at least 50% plus one of employees have to consent to that coverage move. There is one caveat. If the employees do not contribute towards the cost of coverage, a majority consent election is not required. But basically there is a form that has to be signed by 50% plus one of New Jersey workers when they're going to move to a private plan. Arch does have some assistance in this area for employers who don't think they can get this election done. We have people who can come down with the employer's consent and enroll folks in the coverage. We fully explain the coverage, the differences between the state and private plan coverage, and we've been very successful in completing those consent elections.
So Michael has a few questions, but one of them seems like a follow-up to this, actually. So he asks, do you have sample letters to use for the employee election?
We do. Basically, what is required under the state is it's basically a form. It has a bunch of lines for signatures on the bottom with a header saying, I agree to move to the private plan effective as of such and such date. What we do is we also send out an information piece for employees that explains the differences in service between the state and an Arch plan. One of the main differences being under a private plan, you get your benefit check much faster than through the state of New Jersey. There's no additional cost to employees. Employees may see some tax savings when they move to a private plan, and basically have easier access to customer service. So again, we try to not have employees just sign this piece of paper. We want to give an explanation as to why this could benefit that worker.
Cool. I'll come back to Michael's other questions in a moment, but for now, let me jump back to Jason, who asked, does this benefit coordinate at all with private or association or group disability income insurance owned?
It technically does not. Basically, if there's a plan that quote-unquote piggybacks the state disability program, what we do is we're always primary under state law. The state mandated plan has to be primary, so we pay first, and what we do is we send out explanation of the benefits that we pay, and also we send quarterly statements of what we pay, and then it's basically the employer's responsibility to take that information and get it over to the carrier who's administering that excess benefit. So in a way it does. It's just that we typically don't, under law, we don't have the ability to interact directly with a carrier who may have an excess, be paying out an excess benefit. So.
Alexandra asks, what about the FLI benefit? Is coverage included for being out due to the care of a family member or a newborn?
Yeah, another great question. So basically what we're offering to NJBIA members is the disability insurance. The paid family leave benefit is a completely different benefit. You have to send in an entirely new claim form for that, and that coverage is would continue to be administered by the state of New Jersey. What we do, so the majority of the paid family leave claims are maternity claims, and for paid family leave for care of the newborn. So we send information to the claimant as far as how they would file their paid family leave claim through the state. We don't want to leave that employee without that knowledge.
Mir asks, how do I find out my rate from the state?
Yeah, so again, that form that we kept looking at, that notice of employer contribution rate form with the red boxes, that's going to be sent out by the state. They send it out every fiscal year, which again runs from July through June. So those forms are going to be going out to every employer at the end of July, beginning of August. So the state will send that notification. Again, as Tom mentioned, if for some reason you don't have that form, or it was thrown out, or you just lost it, or whatever, if you come to ARCH with your legal name and federal ID number, we can get that information and prepare a quote to you. And when we send a quote to the employer, we send a direct comparison of the ARCH cost versus state of New Jersey plan cost, line item by line item, so you can see this is what it would cost me for ARCH, this is what it cost me with the state, and at the bottom it'll tell you your total savings. But again, we can, if for some reason you don't have that form, I get forms in the mail all the time, it's like, I don't know what this is, I'll kind of put it in a basket for a later day. If you don't have that form, you can just come to us with your legal name and Fed ID number, and we can get that information.
Michael would like to know, how does the state know that you no longer have to pay into the state plan?
Yeah, what happens is when we receive the application from the employer, we do all the filing with the state of New Jersey to notify them that the employer has requested a change to the private plan carrier. We have to send the state copies of the application form, the consent election form, and then basically what happens, the state gets the information, and as long as everything is, I's dotted, T's crossed, everything's done correctly, they go into their systems and they basically turn off the state disability switch and move that to ARCH private plan effective July 1st, October 1st, and that turns off the billing for the state plan disability, and it documents the state's records.
Okay. Alexandra asks, when does information go out for wage reporting? Currently, we receive 3 PSP notice monthly from the state and annually for validation.
Well, basically what the state does is on a quarterly basis, they send out a form to the employers. They bill the employer for the disability insurance, the paid family leave insurance, your unemployment insurance, workforce development, and at that point they ask for your wages during the prior quarter. I'm not aware of did you say a monthly request? Or it's typically a quarterly request for that information.
Yeah, she says, currently we receive 3 PSP notice monthly from the state and annually for validation.
Again, I'm only aware of the quarterly request for information and payment that the state sends out.
she sent in a correction. She says, I meant for the W-2 third-party sick pay.
Okay, yeah. So basically, what happens is at the end of each quarter, Arch is required to send out a third-party sick pay report to every one of our policyholders. We have to detail every claim payment made, the taxable portion of that benefit, the non-taxable portion of that benefit, FICA tax withheld to the employer, and then the employer takes that information and would have to match any FICA tax that that Arch deducted. We also offer an online FICA report to our policyholders. A lot of our policyholders utilize this, where we give them access to a real-time third-party sick pay report, so they can go in anytime they want and run a report. They don't have to wait until the quarter end. The reason I mentioned the quarterly report is we're required by IRS law to send out a mailed quarterly report at the end of each quarter. But again, we do offer a service to have an online FICA report where employers can go in anytime they want and look at their claim activity, taxable benefits, non-taxable, and FICA deducted.
Another one from Shelley, who would like to know, they have 50% of their employees outside the state of New Jersey. Are the taxable wages the total payroll or the New Jersey payroll?
The payroll reported is for New Jersey employees, working in New Jersey.
Okay, so another one from Pamela, who asks, can you customize underwriting? For example, more years of service will give the employee a larger percentage of the benefit. The minimum would be the 66.66%.
Well, we can class out employees. We would not be able to do that on an individual basis. In a lot of instances, what we'll do is, a certain grouping of employees, will receive what we call the statutory benefit, the required benefit, now being 633, and another grouping of employees would receive a different, it has to be higher, it can't be lower than the state required benefit, a higher benefit, but we would not be able to do a benefit by each individual employee. The state would not accept that filing. It has to be done by class of employee.
This sounds like a related question from Alexis, who wants to know, can you have a state plan and a private plan and have the private plan pay a differential if the employee's salary at 66.66% is greater than the 633 maximum?
No, you can. It has to be either state or private. Excuse me.
Okay. So Alexandra asks, can you explain again how rated in the future? We are at 0.4% now and have no claims over the next year. How is rating figured out for next year? Or would we get a notice from the state still?
As long as you're with the state plan, you'll receive a notice every July. And what they'll do is they'll take into consideration, again, the way they rate is they take all of the contribution you've paid into the state plan, all of the claims they've paid out, they run a formula, and then they come up with that rate. So it can vary every year, but that will be reported by the state in July.
Michael asks, about how much does it cost to upgrade the benefit to 70% with a limit of $1,000?
It would depend on what the state assigned employer rate is. I really couldn't say without having that information. Basically, what you have to do is you take your price at the state mandated benefit, and then we would have to get some census data to determine what the employees earn, and what the difference in benefit would be at the higher benefit amount, and then we would apply that differential to the cost. So, but we would have to have that baseline rate from the state to start that process.
Here's an easy one from Sharon, who asks, can you tell me again what info I need to get a quote?
Yes, Sharon. So to receive a quote, you can contact our broker partner, Two Rivers Benefits. Their phone number is 732-842-6200. Or you can send an email to our dedicated email address for NJBIA, which is archnjbia@archinsurance.com. And it could just be a simple note, someone please call me about a quote, and we can certainly take it from there.
Cool. Jason asks, so if taxes to New Jersey are normally paid through payroll, can this continue with Arch's plan? And who is the insurer and what is their Comdex rating?
Okay. Yeah. So yeah, basically this can continue to be done through your payroll provider, but you would have to notify your payroll provider of the change from state plan to private plan coverage. We do send out an invoice at the end of each quarter on the same cycle that the state bills, but that would you would have to get that over to your payroll provider to instead of sending payment to the state, they would send that payment directly to Arch. As far as industry ratings, we are rated A+ across the board. Being Arch.
Sarah asks, are disability benefits taxable?
In most cases, yes. In some cases, no. Okay. For instance, when we looked at those rates earlier, and for the groups that had the lowest state rate of 0.10, and we're going to take that employer cost down to 0, what that means is employees are paying the total cost of the coverage. So in that instance, the benefits would be completely non-taxable. If there's, other than that, if there's an employer plus an employee contribution to pay for the Arch coverage, the employee would be taxed, based on the percentage of premium they contribute towards. So let's say our rate is 1.00%. The employee's paying, the employer's paying 0.50, the employee's paying 0.50. I know the employer rate is 0.24, but just to use this as a calculation, in this instance, the employee and employer would both be paying 50% of the cost, so the employee's benefits would only be taxed at 50% of the FICA of the FICA rates.
Patricia asks, how do you handle seasonal employees? They don't work full-time, so do we still offer disability if we have the private plan?
Yes. Under New Jersey law, you have to provide benefits to all employees, whether they're part-time, seasonal, or full-time. You do have to include them in the wages that you report.
Paul asks, are there restrictions on when we can switch from the state plan to you?
Yes, there are. The state only allows employers to move on the first day of the next coming calendar quarter. So what's today? The 28th? So right now they will allow employers to move July 1st. If an employer does not move July 1st, they would have to wait until the first day of the next calendar quarter, being October 1st, to move the coverage. That's written into the law. So.
Another one from Michael who asks, is private plan coverage still shown on the W-2 and is it tax deductible as a tax payment? He then wrote in clarifying, I mean the withholding portion.
Yes. So basically what Arch does is for every one of our policyholders, we prepare a year-end W-2 listing, listing the amount of sick pay that we've issued and the FICA taxes that we've deducted. Basically what we do, because some employers have already taken that data and included it on the employee's regular W-2, we do not send anything to any governmental entity. We report directly to our policyholders only, and then it's up to them as to whether they want to issue the Arch W-2 as a supplement to the employee's regular W-2, or if the sick pay payments have already been included in the employee's regular W-2, they can discard the Arch W-2. So,
did you mean the withholding portion?
yes.
Okay. What's that?
Sorry, I turned off. That's fine. Yes. Mm-hmm.
Alexandra, and this is actually the last question we have in here, but if anybody wants to sneak more in, I'll ask it before we hit 12. Alexandra asks, what is the annual cap for employee contribution?
Another great question. Yeah, so every year the state sets a wage cap, and for 2017 the wage cap is $33,500 per employee. So once an employee hits that wage cap, premium is no longer paid for that employee. And Arch bills, we have to bill using that same wage cap. Now, a lot of times people will ask us, well, what if I switch mid-year? Do I have to start over again with the wage cap? And the answer is no. If an employee earned $30,000 during the first 6 months of the year, the employer reported their wages, paid the premium on that, Arch would only be entitled to $3,500 of payments made on the remaining wages for the remainder of the year. So it does not start over again. The wage cap is the same whether you've had state coverage all year, private plan coverage all year, or a combination of both. Mm-hmm. And it does reset January 1 of each year. The state sets a new wage cap January 1 of each year.
Well, that looks like about all the questions we have, so I think it's a good time as any to bring things to a close. Don't forget, all of you will be receiving a recording of today's webinar and the PowerPoint slides via email. And when you close out of the webinar, a survey will come up on your screen that we hope you'll fill out so we can understand how best to provide you information in a webinar format. Our next webinar, NJBIA Live from the State Capitol, will take place Tuesday, July 11th, and we'll give a full report on what's included in the state's $35 billion budget. So until next time, for Tom Fascino and Jim Iannicelli, this is Vinny Civitello thanking you for being with us this morning and wishing you a good day.